Hi everyone, Krugs here from AutomatedTrading. Today we're here to talk about our next community project. Okay, so we have run a community project previously in our Discord with our members, but this will be our second project we'll run as a team. So I'm just going to put here community project times 2. If you're not familiar with our community projects, the way they work is that we come to the community with an idea, I guess the bare bones of a strategy, and then we work with our community of traders, members, to, I guess, develop, build, add on to the strategy and make it a more successful strategy and give everyone a bit of ownership, a bit of buy-in, so that everyone has an understanding of the processes that are involved in, finalizing a bot and reviewing it before putting it onto a live market. Okay, we do have some rules that I have in our Discord for our members to work through in order to be part of the project. But this video here is just to kind of walk through the bare bones of the bot, talk a bit about how it works, what's the idea of it, and what we're looking for. Okay, I've got a bit of a running sheet, as you can see on the screen there, which I'll bounce backwards and forwards just so that we keep on topic and keep this video to, a short length. Okay, so going through the first part, we want to work together as a community to build this strategy and make it a successful one. The name of the bot that we're going to be using in this community project number 2 is the Ripper. Okay, the Ripper bot. It is a reversion strategy. If you're not familiar with reversions, they're one of my favorites. But we haven't actually got many reversion strategies in our catalog, so it was a great idea to talk about where it came from and to add it to our catalog. So I'm going to start with what the strategy is and talk it through. But you can see I have it loaded onto the chart already. Okay, and so the strategy starts with a start time, and I'm starting the start time here at the start of the session. So I'm in Central Standard Time, so at 5 p.m. The market opens for the day. And what this Ripper bot does is, based upon your inputs, it creates these kind of lines above and below the opening start price. Okay, so you can see here I've got lines below and lines above. And what we really want to do is we just want to sell when we hit these lines. Okay, and then so we've already hit that line once, so we won't do it again. If we hit this next line, we'll sell again, and so forth. And if we come down here, we will buy this line, and we'll buy this one, and buy this one. So the idea is that reversion means we're kind of reverting back to that opening price. Okay, we want price to come down and then bounce back. So this strategy is a consolidation bot. It's not going to be a trending bot, something you're going to need to run when it's trending. Often we find that with the session open, you have this Australian-Asian session mixed into London. You find that the market does tend to bounce up and down, and we tend to get a good number of wins. And then the US Open happens, and you can see it's a lot more erratic, but you can still see it still does reverse. So you can see here we have it goes up, it's taken a win, it came up, reversed a bit here, took a win, and then it spiked up. It entered a number of positions, but the way the market does, the market generally will have consolidation days as well as pullbacks. And that's the key thing for this bot. The key thing is finding about what is an amount of a pullback. Okay, currently I'm running 20 ticks, I think is my pullback. So I'm looking for 20 tick pullbacks, and you can see it bounce back, bounce back, bounce back. Every single one here bounce back. I've actually got this bot stopping its trades at 7:30, so roughly at 7:30 it shut down. So that's why there's no more trades taken. But you can kind of see here, we go back. This particular day, there's one there, and I had it shut off, so there's no more. You can see here it took a nice trade, pull back, came down here, hit this one, pulled back, came back in here, pulled back, came back in here and pulled back. So I'm currently just running the standard settings. So the aim for me was to not provide you with too many settings to run away with. The idea is that we find the settings to use and parameters to use as a team. Okay, but these are just literally the standard settings, the standard numbers I put in, and I have not fiddled with them at all. And you can kind of see here, we'll just look at the chart for the last 90 days, and it's made roughly about $16,000, profit factor of 5.41. Is the strategy performance totally accurate? No, it's not. But you know what? The fact that we have a profit factor of 5.41, I guarantee you that it's going to be a positive profit factor, and we're going to be able to make this work. Whether it's going to be a 5.41, I can't say for sure, but we can actually use a number of different tools to improve our trading. Okay, so that's the idea of the bot. It just reverses trades. It's a reversion back to a particular point. Okay, so what is it? It's a reversion strategy. When does it work? It works on consolidation days and pullbacks. Okay, you can start at any particular point. You can stop it at any particular time. I've been running it recently and just starting at the start of the day and then turning it off just before US Open. So literally getting 1 or 2 trades a day. Some days it moves a lot more and you can get a couple more, but that's just what I've been doing. Go back to here. What do we do as a team? Okay, so as a team, sorry, I skipped one. Why does it work? The reason why this strategy works is that because of these pullbacks, it always generally has a pullback. Okay, and if it doesn't, at some point the market will reverse and it will come back down. The key thing is you have to stay in a bit of drawdown. Okay, so you want to make sure that you have the ability to have a bit of drawdown because, for example, if this continues up on the long side, hits this position, it doesn't have a pullback, and then continues up to the next one, doesn't have a pullback, you could get into 3, 4, 5 positions without a pullback. So you're going to need to have that ability to have a bit of drawdown, okay? And then the market will reverse and it'll come back and collect all these wins. Okay, so I've seen it do that a number of different times, and that's the beauty of the strategy, but you have to be able to withstand the drawdown. Okay, my favorite thing to do is run it on micros. Currently, I'm just running it on minis, but I run it on micros, and I collect up and I try to stop around $200-300 a day. Okay, so it works. The strategy also works because of multiple entries. If you just have one entry, you get the small amount of money. Like if I was to run 20 ticks on micros, I'm not getting that much money. Okay, it's $100 on a mini, so it's going to be $10. I'm getting $10 a day on micros. It's okay. $10 is okay on one micro, but maybe I want to run 2, maybe 3. If you tend to go on a bit of drawdown, the idea is that by having more positions open up, they're closing off and getting you money to counteract some of the losses. Okay, so the idea of the more trades you make, the more losses it will get counteracted, so your losses will be limited. You can choose start and stop times. We have kill switches involved. We have break even and trail stops. So what I'm going to do now is I'm going to talk through the settings of the bot so you have an understanding, and I'll come back and talk about what we want to do as a team. Okay, so let's pull up the strategy. Okay, so now let's look at the strategy here of the input parameters. There's quite a few parameters, and it's really important that you understand each of them before going ahead and using it, okay? If you're using it just for playback and you want to look at previous trades or you just want to look at the back testing, I would make sure I show the previous trades, okay? You don't always have to do that. If I'm trading it live, I tend not to show the previous trades. I just want to trade live just so that it doesn't accumulate too much data on the screen, okay? But I'll leave it on now because we're going to look at some previous results. I'm in Central Standard Time, so I tend to start the bot at 5 p.m., which means because I'm using 5-minute candles, I started at 5:05. I like to stop ripping. And ripping means when to stop ripping. So when would I like to stop and remove my orders? Okay, not close positions, but just remove orders. So I'm not going to enter any new positions. So I don't want to enter any new positions after 7:30 because that's generally when there's news and the US Open starts to happen. So I tend to not put new positions in, and then I stop the bot at the end of the day or half an hour before the end of the day at 3:30 just to cancel any open positions or close them. Okay. So that is how the timing works. You have an option here of having stop orders. And when you put stop orders on, it's going to place a number of orders on the screen. So that's going to limit to how many orders if you're running it with a prop firm and so forth, it's going to limit to how many orders you can put on the screen. So you can actually run it as market orders. But when you run it with market orders, there's obviously more of a chance of slipping, because if price hits a certain point, it could move past that point quite quickly in order for it be too quick before the order gets placed and gets opened. So you may have a bit more slippage. So I tend to find that stop orders tend to have less slippage. Okay, the number of X entries is the number of lines that you saw. So I'm just going to start with one and show you. I've got the long side and the short side. Okay, so this is where I would actually be taking the long side, meaning that's where I'm taking short positions, and the short side is where I'm taking long positions. You have break even, trailing stops, and a kill switch involved. So the kill switch is for unrealized profit and loss. So if you set this, for example, at $500, so let me just give you an example. When you tick these, okay, they will appear down here. So break even, I could do break even ticks as a trigger. So if it hits 40 ticks, then I'll move the stop loss up to 10 ticks. Okay, the same with my trailing stop. So I'll tick that. Trailing stop is down the bottom here. So I can trail by candle or an amount. So I could trail, as soon as it hits 10 ticks, I'll trail by 10 ticks and it'll keep moving up. So I can do that. I can turn that off. It'll reappear. And my kill switch. So this is where it says the max session profit. So as soon as you hit $500 in profit, even in unrealized gains, it will shut your bot down. And I'll show you how it does that in a moment. Okay, and same with losses. Okay, but I'm just going to run one position, and that's why one position is put here. If I was to choose, say, 3 positions, I would have to put in the inputs for 3 different positions. You can see that. I'll just show you one position for now. Okay, the Ripper distance is the number of ticks above the opening price and below the opening price. The contracts is obviously straightforward. Take profit, I'm only looking for 20 tick profit. I'm going to have a 500 tick stop loss just for this, just to show you what it looks like, and which is not too bad, because if you think about it and I add multiple positions, that stop loss is going to get shorter, and I'll show you what that looks like in a moment. And that's pretty much it for the settings. Once you've got the Ripper distances and the size of the TPs and the stop losses for your positions, the rest of it is pretty straightforward. So we will start that off. So we will tick that, and we will get going. You may find that you might get some order errors in that. It's just because I'm using playback, and you can see I've already taken a position here and I've got a short position here, and that's what it does. Okay, so let's look at what this looks like. Actually, I'm just going to jump forward to the next day, so you can actually see this in action. So I'm going to jump forward until 2:30 p.m. Okay, and we can kind of see price had taken off. All right, and we will start this off. So you can catch, I guess, the last component of the day, in which there will be no trades, but then you'll see what happens at the start of the next day. So we're sitting here at 2:30, 2:35. We're waiting for that market close time of 4 p.m. So we'll just jump ahead. And there we go. We've seen they closed off, and now we have our 2 positions being placed, and now we're looking for hit those particular points, 100 ticks away, and we're hoping it pulls back 20 ticks to get our TP. So you can see it always kind of reverts back to that middle values. That's why it's called a reversion strategy. Okay, and there we go. And all we're after is a quick pullback, and there we go. We've got our quick pullback, got our easy $100, and we're done. Okay. I would say this is a great strategy for one. I would say it's good for one particular target, things like that. But in the past, I've seen on some trending days it just to go, and if it hits your thing and it just doesn't pull back, it can be quite dangerous not having more targets. So I would always recommend having a few targets, just so you can collect some profits before you get a win. Okay, and what I mean by that is, let's have a look back at some of these trades and see if we can see a day where it just literally went, like here. So it literally came up here, came back down here, hit our entrance point, so we're going long, and then it never returned. So we literally had our 500 tick loss, okay? If I had multiple positions, they would have all been wins. So I would have made a fair bit of money before my loss, so it would have minimized my loss for that day, if that makes sense. So the idea is to have not just one entrance. The idea is it's actually developed to have multiple entries, okay? So let's have a look at doing that. So let's just turn our strategy off, and we will refresh, and we'll go back. Okay, so let's talk about how we can add more positions to the chart and talk a bit about and show you an example of how it improves the overall trading, and talk a bit about the other parameters too. So we have, if you're just using it for playback and trying to look at previous data, I would obviously show the previous trades. But if I'm trading it live, I'll generally turn this off. Just it has less data on the charts and runs a little smoother. But for the sake of this back testing, I'll leave it on. The start time is the opening price I'm looking for, so at the start of the session. I'm actually, before my settings where I had this set at 7:30 a.m. Okay, and I just highlight those and change those. That is when I turn off when I stop putting new orders on the chart, and I just remove them. So I'm trading from literally 5 p.m. till 7:30 a.m., removing those orders, but not closing my positions. I'll close the positions at stop bot. That's what stop ripping actually means. No more orders, please. Okay, but for the sake of this example, I'm just going to run it all the way to the end so you can actually see how the trades actually play out. You have an option of having stop orders or market orders. Okay, stop orders are going to be more accurate because they're at set prices, whereas market orders are going to wait for a close at that particular price, and there could be a fair bit of slippage or a range of slippage involved in that. So you want to be mindful of that. The reason why I need to have difference is because if you're running a prop firm that only allows 5 contracts, that means, and you're running stop orders, that's going to place 5 contracts above and below the price, which is 10 contracts in total, which is not what we want. Okay, if you can only have 5 contracts in total, so you might want to do market orders and we'll place it one at a time. Okay, but I like to use stop orders because they're more accurate. I'm going to run 10 positions just to show you how they, I guess, space out. Above lines, below lines. We can use break-even stops, trailing stops. You just tick them and they will appear down the bottom. So I'll just make that as 1 for now, and I'll show you what it looks like. So there you go. Underneath the positions, you'll see break-even happens down the bottom. So at 40 ticks, there'll be a trigger and the price will move up to 10 ticks above your entry points. Same with trailing stops. If you were to tick that, you can use amounts or candles to trail, same as all the other bots we have. Super accurate, and we'll show you how good they are in a moment. You can also have a kill switch. So a kill switch will actually stop you at unrealized gains now. A new addition that we have to our bots is that if I set $500, as soon as you hit $500 in unrealized gains, it'll shut down the strategy and you won't take any more trades, and it will just show you a green spot. Okay, which is really powerful. I'll show you those in a moment, but I'm just going to run 10 positions, and I'm just going to show you how successful it can be with 10 positions. I'm going to run at 100 ticks ripper distance. That means it's 100 ticks above that original opening price. Okay, run contract. I'm going to run 20 tick TP, and I'm going to 500 tick stop loss. It looks quite big for the position 1, but as you create more positions, the stop loss gets smaller and smaller. You don't have to make it smaller and smaller, but the more positions that close, it means you're adding to that position, and then you're getting out of the position in a profit. So that means that your loss is going to be less. Okay, I like to do something at the moment, just running 10 ticks each time. It's just an example I'm running. It's nothing that I would recommend. Just want to show you for the sake of this example. I'm going to run 90 ticks for the ripper distance 2, and that means that first line is going to be 100 ticks, the next line is going to be 90 ticks above that, and then 80 ticks above that, and so forth. And I'm just going to take 90 ticks off my stop loss, so that means that all my stop losses are going to be around that 500 tick mark from the opening price. Okay, and then all these are the same, 70, and then just keep 60, 50, and keep taking that amount off the previous stop loss, all the way down to 10 positions. So my last position is only 10 ticks above, and I've got a stop loss of 50. Okay, so let's have a look what that looks like. Okay, so let's run this now. You can see that when you try to run it in playback, there's no market data, so you do get some errors, which is fine. They're just normal errors you get from trying to place positions in playback before you've actually started the playback. So we're just going to start it now. I'm just going to show you that same day and how it looks with our positions. Okay, so we're waiting for that end of the day, just happens there. We're waiting for that, the open, and there we go. All our market orders are placed. You can see there's 20 orders on the screen, so you got to make sure that your account can handle 20 orders. If you're running 10, you could be running 1 or 2 orders. It's just totally up to you. Okay, I'm just going to use this as an example. You can see the first one is 100 ticks away, that's 90 ticks, 80 ticks, 70, 60, all the way up to 10 ticks above that. Okay, and we know the first one wins. We saw that before. But I want to see how the others act. The key thing we're looking for is a larger movement and then a pullback. Larger movement, pullback, and that's exactly what we're looking for. And we know we get that pullback here, which is going to be great. There we go, we got our first pullback. Now we're looking to see where price goes. Does it continue up, continue down? You see there's a fair bit of consolidation there, waiting for a bit of a breakout. Looks like we're kind of going short. The market's changing its mind. And then it looks like we're not going to get any more trades for that day. Oh no, we turned it off. We're not turning it off at 7:30. Normally I turn mine off at 7:30 and remove, but here we go. We now have long. Let's had that pullback. Perfect. Pullback of 20 ticks. It's gone long again. Pullback of 20 ticks. It's just what markets do. Markets tend to make a movement and then they generally pull back. Sometimes they continue up. Look, like it opened 2 positions there. So we're in 2 positions. You can see now we're in 2 positions, but then all of a sudden one gets closed. It's a bit hard to see. Maybe I'll just pause this and have a look at some of these positions. Okay, so you can kind of see what happened here. We haven't had a loss yet, but the price action is actually showing a loss, if you can see that on the screen. Okay, it actually says I actually got into a position and then it lost, which is not true because I can see I know, for example, it didn't have any losses. So let's have a look what happened here. So what happened here is that we had our first loss here and it pulled back 20 ticks, came up, pulled back 20 ticks, came up here and it didn't pull back. It kept going, and then all of a sudden it hit this one, so we're in 2 positions, and then it pulled back enough for this take profit. But because this one was open first, it closed it first, so it looks like a loss, even though it's not. It then still came back down and hit this take profit here. So it looks like a loss, but it's actually a win. We haven't had no losses, okay? However, if I was to look at the strategy performance, it would actually show, in real time, it would actually show a loss of $200. Okay, and then profit factor of 3.5. So the values that I'm showing you with the profit factors are probably going to be even more successful because of how inaccurate they are just with showing the results. Okay, overall we're still in a winner and it's working perfectly, but it just showed you that as a loss. It's just the way futures work with their contracts. Okay, and their positions. It's because it combines positions and you can't have separate positions together. Okay, there we go. We had our next entrance, and then all of a sudden it has a pullback, and does it hit it? We'll have to wait and see. There we go. We had our next pullback, which was a nice win. Maybe I'll flick back to so forth. So now we had a bit of movement. Ideally, if we would want all these positions to open and then on that pullback, close all those positions and then the end of the day. The day that it continues to run north and never pulls back are those days you're going to have some losses. But the idea of the strategy, it's such a high success rate that you end up making thousands and thousands of dollars before you have a loss. And that's what I found running it myself. And yeah, I'm not saying that losses don't happen. They do happen, but it's just, you can see when we get up the top here, the stop loss is a lot closer. So the risk level is a lot less. And the reason why we like doing that is because at the start of the day, there's generally the pullbacks at that London and Asian Open and stuff. But you can kind of see. I'm just going to pause it there because you can kind of see how the strategy works. And I'll just talk a bit about our other checklist items. Okay, so how to make this strategy a bit better using the tools that we have available to us. Break-even stops are fantastic. I actually really enjoy using trail stops. Okay, but I'm going to show you. I guess I'm not going to show you that. What I'm going to show you this example is the kill switch. Okay, I know that I can set a kill switch. I'm actually going to run only one position just to show you how it works, and I'm just going to set a profit of $50. Okay, that's all I really want for the day, and I'm going to have a max risk of $500. Okay, and that's all I really want. I know this is going to be a winner because I saw it, but I just want to show you what happens when I do the kill switch. So I've got a kill switch at $50. Okay, you do get a bit of slippage involved, but it's usually positive slippage because you're trying to get out of a winning trade. And what we'll do is we'll run it. Okay, so you can see it on the chart. The cumulative total so far that's all the previous days in total. I've made $50 each day, and you can see it adds up. The current session. So the current session looks like. I'll show you what the current session looks like. There you go. As soon as you hit your profit, it will get you out of the trade, and it will shut you down at your $50 and put a green line there and take no more trades. Okay, and my loss limit is 500. Okay, so let's see this in action. I've gone back to look at the previous day again, and we will run it. Okay, so you can see there it had a bit of slippage. It hit your $50, but price pulled back a tiny bit, but got you out of the trade. Okay, you're always going to get slippage when you try to close a market order by any means necessary without putting an order limit in. But look, if that's the case, you don't always get negative slippage. Sometimes you get positive slippage. So it is what it is. But it is a great way to lock in profits. Okay, so you can lock in $500, $600, and then so you don't have to get into too much drawdown and so forth. So that is a great strategy we can use. Plenty for us to talk about. So what do we want to do as a team? We want to find the best instruments and parameters. We want to run them on sim accounts, and then each day show our performance to say, okay, this one's better than this one, this one's better than this one, and we all run it together so we can build this successful strategy together. Things to consider. You want to consider how much you want to risk. On that bad day, what is the maximum amount you want to risk? Okay, if it's going to win a lot of days, but on that one day that it does lose, what do you want to set as your risk? $1,000, $1,500, whatever, and that's where you want to set. And it's going to have to adjust all your values because of that. Okay, and same with drawdown. Okay, do you want to run it on minis versus micros? If it was an eval, I'd be happy to run it on minis, but if it's my PA, I'm going to run it on micros. Note that Apex don't allow adding into losing positions, adding contracts in losing positions. I think they allow one, so you might be able to do two positions, but you're better off using a different pot firm if you want to run it on one of those, like a Top Step or a Bull Knox or so forth. But that is the strategy. I'm excited to work together with my team, you guys, and make this a successful strategy, have a bit of fun with it, and I'm really looking forward to the discussions that we will have and sharing the results with, I guess, the public in the future. But that is me for the day. If you would like to find out more information about Ace Trading, please like, subscribe, come check out our Discord, come check out our What page. We have so many different bots, a big catalogue of indicators, bots, everything. Come check us out. Otherwise, I'll catch you later. Krugs signing off.